My target on gold is 20,000 by early next decade. My target on silver is 500. By the way, the gold silver ratio, which had rolled over last year because silver did pretty well for a while, and gold had consolidated some of their run. When silver just goes faster when it goes, it's percentage-wise moves faster.
The year 2024 was remarkable for the metals market, with gold achieving record-high prices and delivering an impressive annual return of 25%, its best performance since 2010. Goldman Sachs revised its gold price forecast, stating that it no longer expects prices to reach $3,000 by the end of the year, instead projecting this milestone for mid-2026, due to expectations of a smaller rate cut by the U.S. Federal Reserve. Meanwhile, a research report from CITIC Securities expressed optimism about gold prices in 2025 based on its comprehensive gold price analysis framework. David Hunter shares an exceptionally bullish outlook for precious metals. He confidently targets gold at $3,400, a projection he feels comfortable making. For silver, Hunter expects it to surpass $35 in the near term, potentially within the next month or two, before climbing toward the mid-40s. Ultimately, his long-term target for silver is $75, though he acknowledges it may take slightly longer than 6 months to reach this level. The price of safe haven silver is encountering challenges amid a risk-on market sentiment, spurred by reports that U.S. President-elect Donald Trump's economic team is considering a gradual increase in import tariffs, which has bolstered investor confidence. However, silver demand could be boosted following China's recent stimulus measures. As the world's largest consumer of metals, any improvement in China's economic conditions is likely to enhance the industrial demand for silver significantly. David Hunter sees extraordinary upside potential for both gold and silver. With long-term targets of $20,000 for gold and $500 for silver by the early 2030s, he remains confident that this bull market will redefine the precious metals landscape and restore investor confidence in the sector. We're about to explore the video, but first, subscribe and hit the bell icon to keep up with our newest uploads. Your feedback in the comments is always appreciated.
I think the metals look great here.
Okay.
Silver, first of all, gold. I mean, gold is coming out of a consolidation over the last several months where if you look, particularly if you're looking at a monthly, kind of came into a wedge technically, and it's breaking out of that wedge as we speak. So we're not far from highs. I think we'll push through the old high last year, and my target is 3,400, and I think I'm very comfortable with 3,400. If it exceeds 3,400, it won't surprise me. And that's again first half of this year probably. It could spill over from there, but I think most of it's this first half. Silver has been the laggard of the two, particularly the miners of silver, yeah. But I think silver is also showing it's coming out of consolidation. It got up to 35 and a half, I think, in its run early, last year or whatever, towards the end of last year, and it's corrected down to just below 30, and is now trying to turn around and get going here. I think we'll be back above 35 pretty quickly. I don't know whether it happens in the next month or it takes 2 months, but my guess is it's the next month and on its way to the mid 40s, and then from the mid 40s I have a target of 75. So again, it's coming from farther back, so it might take longer. In terms of it may take more than 6 months, but it can also get going fast and could be most of that move could happen in the next 6 months. So that's a hell of a move if we go from 30 here or 30, 31 here to 75, and that's kind of what I expect. By the way, the gold silver ratio, which had rolled over last year because silver did pretty well for a while, and gold had consolidated some of their run. When silver just goes faster when it goes, it's percentage-wise moves faster. So in the bull run, we had brought the gold silver ratio down from 80 or 85, 90. I don't remember where it topped out there. And then it turned around here in this most recent correction because silver corrected more and went back towards the high of that ratio. If you divide 3,400 by 75, I think it takes you down towards 40. Let's see. Yeah, I think it takes you down towards 40, 45, something like that on the ratio from up over 80 or 85. So what that means is as that ratio drops, that favors silver. I mean, silver is outperforming gold. And that's exactly what you get in bull markets in the metals. So I expect that. The miners themselves, which have lagged by a lot, I think it's just a matter of people need to gain confidence that this isn't going to be another one of those failed rallies in the metals. They go and then they stop, particularly silver. They look like they're lifting out of a consolidation and then they stop and correct again. And I think that's just discouraged the minor investors. And so they're more show me investors. It's like they're going to come in later. They're just not going to jump on the bandwagon so quickly.
Gold has been revered for its scarcity, luster, and durability for centuries, solidifying its status as the ultimate store of value and medium of exchange. From ancient trade routes to the backbone of modern economies, gold's significance is deeply embedded in human history. Its rarity has been a key driver of its lasting value, setting it apart from paper currencies with a naturally constrained supply. However, in today's digital age, Bitcoin is emerging as a formidable contender, challenging gold's historic dominance. After surging over 150% in 2024, Bitcoin has captured global attention, stepping into the spotlight as a potential alternative store of value. David Hunter acknowledges some traditional metals investors have turned to Bitcoin as digital gold, but he sees minimal impact on gold and silver at a macro level. He anticipates the economic narrative will soon shift toward rate cuts as inflation eases and data points to a slowing economy. Now, let's delve into the video.
Yeah, I'm not saying we didn't lose some investors that used to be traditional metals investors to Bitcoin. I'm sure there are. People think it's, it's digital gold or whatever.
Right.
So I'm not saying that hasn't happened at the micro level. On a macro basis, what we're seeing in gold and silver is gold and silver's own problems, or particularly silver's own problems. It's not. I think Bitcoin has little to do with any of it, and not going to hold back gold and silver now or post bust. My target on gold is 20,000 by early next decade. My target on silver is 500. So clearly, I'm not thinking Bitcoin's an issue, and I don't know what Bitcoin is in that. Maybe it flies too, or maybe it doesn't go. It could be. I have no opinion on what Bitcoin's going to look like after the bust. Or frankly, it's got to prove itself in the bust before you can have any idea what it's going to look like.
What it does, yeah.
If people get convinced that inflation is not ticking up, but actually still trending down, and if the economy, data points start showing, data releases start showing the economy is slowing more, I think you'll be right back in the narrative of, we could have 3 or 4 cuts this year. They'll start with.
I see.
It'll start with, those 2 cuts look pretty. I'm confident in 2 cuts again, instead of what, there's starting to be talk about no cuts, or even people, even though they don't think it's a high probability, talking about the possibility of the Fed raising again. I think that's not going to happen. I think we're likely to get 4 cuts this year. I don't even, number of cuts to me is, a game. I don't worry about that, but it is part of measuring a narrative, which, where's the narrative, the 2 cuts is the 4, whatever. But personally, I think the bigger story is going to be that this economy is going to slow faster than people expect. Maybe be in recession much sooner than people expect. And then from there, see even worsening from that, and that inflation is actually, we may be finally getting to the point where, because shelter was a net help this time around in terms of inflation lower. I think it came in below expectations. We may be finally at that point where shelter starts going. He starts, recognizing the weakness in shelter, because it was such a laggard. It was, for a long time, it was kind of propping up numbers. So I think we may be at that point where you get the opposite, where shelter is actually contributing to the weakness in CPI and in inflation. And I think you're gonna have to, in other words, it's almost like you're gonna have the wind at your back for the markets if numbers are starting to come in below expectation.
Gold and silver have long been regarded as pillars of value due to their rarity, resilience, and historical significance as forms of currency. Despite the rise of alternative assets like Bitcoin in recent years, these precious metals continue to hold their ground, bolstered by their inherent characteristics and finite supply. Gold's performance remains robust, with expectations for new all-time highs driven by global economic uncertainties and central bank purchases. Similarly, silver, although often trailing behind gold, shows promising potential for substantial growth, fueled by industrial demand and positive investor sentiment. As economic conditions evolve, both metals are likely to outperform, particularly in response to inflationary pressures and possible shifts in monetary policy. Which precious metal, gold or silver, offers the most promising investment opportunity in the current economic climate? Join the conversation, share your thoughts in the comments, give us a thumbs up if you found value in this video, and subscribe to stay engaged with our community.